Boom, we are live. What is up, guys? Welcome to Stock Watch Sunday. So many people have already started to tune in, and that is because they are part of my Twitter page or Facebook, or they're in our Discord. If you guys aren't a part of that, be sure to go check that out as well. But first and foremost, let me welcome you here. Hi, my name is Brad, and this is Stock Watch Sunday, and this is Own the Chaos. The stock market is a crazy and chaotic place, right? Well, I made it my mission to help you own it. So if this is the first time you ever tuning into my channel, first of all, welcome, and you have arrived at the best possible time of the week. Stock Watch Sunday is a time where I go live every week at 8:30 p.m. Eastern time on Sundays, obviously. And I go over the stocks that I'm watching throughout the week. It could be potential earnings plays that might turn out well, or maybe there's something going on in the middle of the stock market, and there's certain stocks that you may want to take a look at based off of whatever climate that we're in. So if you guys want to be a part of that, if you want to participate in Stock Watch Sunday each and every week, as well as see all my other videos that I put out on Mondays, Wednesdays, and Fridays, I would encourage you to hit that subscribe button, hit that notification bell, and if you give you some sort of value out of tonight's video or tonight's live stream, I certainly would appreciate a thumbs up as well. I also want to encourage you guys to check out the Chaos Crew that I have called it now. So the Chaos Crew, if you guys aren't a part of it, if you click the join button over on my channel and be a channel member, you will get a watch list from me every single morning before the market opens. And that is the first tier. There's actually two tiers. So that's the first tier. For $4.99 a month. You get a watch list from me every single day. Pretty good deal, right? And then the $9.99 one is actually a Q&A from yours truly, and I've actually had some interest in that. So I actually hadn't participated in that, haven't really messed with it because there hasn't been too much interest, but people are starting to filter into that. So for the second tier, it's $9.99. You'll get all the watch list every day, as well as a video. You guys can submit questions to me, and then I'll answer them to you via a private video for those paid members as well. And then finally, if you want to be a part of the mentorship, I always talk about this, promo code STOCKS. I've been running this promo for a while. If you guys want to be a part of the mentorship that goes on every single day, which you can see a lot of folks in here are already in it, the link down in the description below, if you want to check that out, the mentorship, it is free for an entire month if you hit promo code STOCKS at checkout. Would love to see you guys there. All right. Got all that out of the way. Whew. Man, that was a mouthful. It's crazy. When I'm doing these live streams, I just kind of roll with it. When I try to pre-record videos, you should see me. I'm like yelling at myself, getting frustrated. But it's I would much rather do live streams every single day. But I love the way that the pre-recorded videos turn out. Just better quality all around. But anyways, what's going on in the markets this week? Well, we just saw that OPEC finally reached some sort of agreement, right? Could this mean that oil makes a turnaround? Can oil be investable again? I would say no. I wouldn't say that it's investable. I would say that you could probably trade it, right? Trade the trade. But I think we've already seen that move. And we talked about oil making potential moves last Stock Watch Sunday, and we talked about Oxy and XOM, how well they've been doing, and they skyrocketed. This is what Stock Watch Sunday is all about, right? We're watching the ones that have potential moves. So OXY, XOM, those two had amazing moves this week. I don't think they have similar moves this coming week. This past week, but I don't see them coming and continuing this coming week. The reason being is, folks, is demand. And if you want to get more details about this, I'm not going to go into too much length about it now, but if you want to get more detail, be sure to tune into tomorrow's video as I go into much more detail about this. But demand has come down 30% since the stock market crashed. Demand was already low before the crash itself, and then this just compounded it even more. We could see gas prices below $1, and that might sound like a really great deal to you, as somebody who might be using gas. But the fact of the matter is that if you're stuck in your house and you're not working, you're not taking advantage of the low gas prices. So that's part of it. But the other part is just oil is there's just so much of it right now, and demand is down. They said that the reports are coming out that oil storage could be at capacity by July 4th. And that's a bad thing. That means that drilling will stop, refineries will stop. So not looking good for oil long term. Now, like I said, you might be able to make a play here for a short-term pop. I don't think we see the kind of move this week that we saw last week, but stranger things have happened. If If you guys want me to take a look at any of those stocks, I certainly will open it up to questions in the chat here. If you guys want to, ask me about them, feel free to do so. The only thing I ask is that give me some context to what it is that you would like me to watch. Also, I will open up the phone lines. If you guys want to give me a call after we go over the stocks that I'm watching, I will open them up for you guys, and would love to hear from you. So be sure to get your fingers ready to dial in if you guys want to do that and talk to yours truly. I certainly would love to have you on the show. All right, so some earnings we got going on this week. The big banks this week are earnings plays. That's going to be the main focus. I also want to focus on Johnson & Johnson and Abbott. So J&J, ABT, those also have earnings this week. We're also going to be looking like at Bank of America. I think is probably the one, in my opinion, that would be the one to look forward towards. There's other ones, Wells Fargo, JP Morgan Chase, BlackRock, all those big banks are going to have earnings this week. They're going to be bleak, but I think the outlooks are going to be good. So we'll see. Again, I think there's going to be some good opportunities there as well. Before I get into it, let me welcome some folks. What's up, Big Balla? Am I still trading on Robinhood? Never traded on Robinhood and never will. So thanks for that. What's up, Blade Runner? See you there, buddy. Fill that Jeep for $20. Yeah, I mean, shoot, man, if I can fill my Jeep for $20, that'd be sweet. But again, like I said, it's not exactly a good sign for the economy when oil is that low. All right. So what do you think about TOMC? Again, so just give me some context. So Steve Young, I would love to answer that. Give me why you see value in it so that we can have an actual discussion instead of just thoughts on. So that's kind of what I was talking about. Don't mean to pick on you, but just a good example there. Connecticut's 229. I guess that's pretty low. Here in Maryland, it's below $2, well below $2. So it's interesting to see how all this is going. All right. Nice shirt, bro. I got one just like, yeah. So actually, if you guys want to check out the shirts, this is actually a buy the F and dip shirt. So you guys can't really see this, but let me stand up here. Pretty cool shirt. We got a ton of them. So I'm sure you'll see the little ribbon underneath of this video. Go check that out. I got plenty of shirts that, helps this channel grow, helps support us. And so yeah, pretty cool stuff. It is Atari actually, but it's instead of Atari, it's just BTFD. So, all right, let's go ahead and get into it. So the first one we're going to be looking at is Johnson & Johnson. So let me pull this up here for y'all. And I'm going to bring you over to WeTradeHQ.com. This is a platform that I built with my partner, Jake. And it's a great platform to not only check out your favorite stock and see what it's up to, but also a great place to learn. So as I was saying before, I have the mentorship where I go live with folks every single day of the week from 9 a.m. to 10 a.m. Eastern time via a Zoom chat. But I also am with them in a private Discord group as well, all day, every day. So I can answer all of your questions. We can share ideas. People are crushing it in there. And my favorite part about what it is that I do in the mentorship is that it's not just, hey, do what it is that I do, see what I do, and just mimic it. It's not anything like that. It's a community where we get to share ideas, and people are trading things that I wasn't even looking at, but we get an opportunity to share them with other people and help other people learn and grow, celebrating their success. It's a great community to be part of. And you can go to WeTradeHQ.com if you want to be a part of that community. So this is absolutely free, though. You can come here and search your favorite tickers, which is what I've just done over here. And I pulled up Johnson & Johnson. And they have earnings this week on Tuesday pre-market for the fiscal quarter ending on March 2020. Estimated earnings are at $2.11. It's also important to note that Johnson & Johnson actually has really good dividends. So if you're looking to invest in something long-term, Johnson & Johnson probably would be a good one. They are yielding dividends that are around $2.70 per share, compared that to the average of the S&P 500 dividends, which are around $2.14. So they're on the higher side. So if you're looking for a high yield dividend, J&J might be a good one for your long-term portfolio. But this week with earnings expected to be around $2.11 per share, I think they actually end up beating that. You can see that this has an amazing V pattern right here for obvious reasons. It's been moving with the rest of the market, but it's been moving even more so because they've come out with a potential vaccine that may be released by early fall. That's what the latest reports are as far as J&J is concerned. And of course, we're talking about the Rona. And so I think they actually, honestly, I think they end up beating earnings. Here's my take on it, though. I don't think the earnings are going to matter. And it's probably going to be a running theme here with the rest of these earnings reports. Before the market, and now I'll come back here. Before the market, crashed, obviously we made plenty of trades based off of earnings. And obviously, before we go into it, into trading earnings, understand earnings is very, very risky. If you're going to actually trade earnings, it's very risky. So understand that going into it. But with earnings reports coming out since the crash, since mid-February, earnings have not mattered at all. They could have been good, they could have been bad. If the overall market's, bad and there's just fear everywhere, it doesn't matter what earnings are. And it hasn't, and it's proven itself. But I think that this week there could be a little bit of a change. I think Johnson & Johnson probably won't matter as much as these banks will. So J&J, like I said, potential vaccine could be ready by September. That would be huge, especially as kids are trying to go back to school in the fall. So, there's plenty of companies that have thrown their hat into the ring, so to speak. We've talked about Gilead. We've talked about a lot of these other ones. And so Moderna. I mean, there's just so many of them. Regeneron. So looking at J&J, I want to see what the outlook is going to be on this. So there's several things that you want to take a look at whenever earnings are in play. Obviously, if they beat expectations, that's always a good thing. But in the event that we are in right now, I would say that the more important thing to look at is the outlook of something like J&J or Johnson & Johnson. And I would say the outlook's important because we want to see if they can provide us with any kind of update. Have they fast-tracked this a little bit more? Could we expect a vaccine by July? I don't know. If we see something like that, I think that J&J is going to be a very, very fast mover. And if we go back and look at this chart here, you can kind of see that it closed around 141 on Friday, or on Thursday, rather. Sorry. And I keep forgetting it was a 3-day weekend. So 144, we'll call it 145, 144.92. It was the high on Thursday. And so I would say that if we can have a sustained break above that, especially if earnings are good, and the outlook is good, this should really retest the highs here, right around 154, 155. So be on the lookout for this. If it does not actually turn out to be very good at all, I would look for a breakdown below a 140. If it starts to break down below 140, could potentially be a possible short play. But in my opinion, especially if you're looking to go long on this for a longer term type of investment, I like Johnson & Johnson for something to add into your portfolio for your long-term stuff. I think still, even as it's come up here, there's a lot of people that are fearful that, because it's come up so sharply that potentially it will go back down. We could retest lows. I don't think that's the case, especially for Johnson & Johnson. I think that this is still a really good price to be in at as far as Johnson & Johnson is concerned. If you didn't grab it at the lows and you're worried about grabbing it here, you could always just wait till after earnings. Wait to see what the reaction is. I think that there's definitely potential that you could grab in on some sort of area of consolidation. We saw this previously, especially when they were going through their lawsuit and everything like that. That was a really big issue for Johnson & Johnson. But, they ended up settling out and then had this really strong move before the inevitable crash. So like I said, I think this is definitely going to be one that if I were to risk something, if I were to take a risk on earnings this week, Johnson & Johnson would definitely be one that I would consider taking a risk on. But at the end of the day, it's still very much a risk. If you want to take a shot at that, you can look at those levels that I just pointed out to you and, potentially make a decision there. It's completely up to you, though. Obviously, that's why we call it Stock Watch Sunday, not Stock Buy Sunday or Stock Sell Sunday. We just look at these for potential moves and see how they play out. I can't tell you how many stocks have done so well coming out of, what we've talked about in Stock Watch Sunday, how that's actually a lot of it's come to fruition. So, be on the lookout. Definitely something to keep on the watch list and see what happens on Tuesday pre-market for Johnson & Johnson. Let's take a look at there's some shenanigans going on. Use that promo code. You won't regret it. Thanks, Blade Runner. Appreciate it. You guys are just messing around. What's going on, Jake? Good to see you. Alan, Bodie, what's going on? here a little late. Hey, no problem, man. JD, what's going on? Check AGNC for dividends. Yeah, there's plenty of other dividend plays. I was just pointing out Johnson & Johnson as compared to the average of the S&P 500. So, all right. Cool. All right, so moving on to the next one, let's go ahead and take a look at that. It's going to be ABT. So it's going to be Abbott Labs. They actually have earnings this week, and that's going to be on Thursday pre-market. Their estimated earnings are around 60 cents per share. And again, this is going to be one that maybe they beat earnings, maybe they don't. I actually think they beat earnings. Abbott is one. So if you guys haven't been following along, Abbott has been doing testing for the Rona. And they've been doing very well, have had positive results as far as that's concerned. You can see that this has obviously moved up quite a bit as well. Same type of reaction as the rest of the market, right? Right now, it closed on Thursday, 86.04. Again, earnings are going to be pre-market on Thursday. The focus is going to be on the testing outlook here. You can look and see that the highs here are around 89.78. So if we can break those highs, very good likelihood it may continue here. But it's going to be a tough resistance for it. So going into earnings, I think that's where the move is going to be. So if you could grab, some shares here around 84.27, 84.30 in that area, that's a really good area of support if it ends up pulling back to that point. But I think this runs into earnings and then maybe actually sells off a little bit when people realize the earnings may not be that great if they happen to miss them or what have you. But these earnings aren't going to be reflective of the testing reports that they've come out. I think that we won't see that reflected into that testing probably until next quarter's report. But like I said, I think the outlook here is going to be the important thing to consider when these earnings do come out. I think that if we can get some sort of news from them during the earnings release that testing has been accelerated, or that if we have some number that we weren't expecting of tests that were completed and accurately administered, I think that ABT is definitely going to be a solid one moving forward. But like I said, I think that we see this run into Thursday's earnings, and then there's probably going to be some sort of sell-off. So like I said, if you can get in that 80, 83, 30, somewhere around there. What did I say? I'm losing it already. Can you believe this? I'm losing already. So yeah, 83.30, 83.27, somewhere around there is going to be probably a solid point to add if it actually ends up dipping down to those levels. You could also make an argument for it to coming back down to about $81 or $82. I don't think that happens going into the earnings report. I think we only see this accelerate and actually go up because people are probably going to be anticipating some sort of good positive news from ABT as a result of these tests that are being administered. So that is my take on ABT. My play, I think I'm probably going to actually swing trade this. I'm going to look to possibly make a good accurate entry or a good entry on this on Monday and swing trade it but up until those Thursday earnings, and then I'll probably have to make a decision. If I'm up quite a bit, I'll probably end up selling a few and then maybe leaving a few just to see how earnings play out. If it doesn't work out, I can always just end up taking a loss. I always manage my risk appropriately, and that's of course what you guys should be doing as well. But I think Abbott probably ends up running into those earnings on that anticipation. There's always a buy the rumor, sell the news type of cliche that a lot of people like to throw around. And I think Abbott could be one of those that falls into that category. So moving on, we're going to go to Bank of America next, but let me go ahead and check in with you guys, see how everyone's doing. How's everybody doing tonight? If you're getting value out of this video, I would appreciate, again, a thumbs up if you guys haven't done so already. Again, just shows support for the channel. We've been growing, fam. It's been awesome. Over 12,300 subscribers, and we've seen 1,000 subscribers in the last 28 days or the last month. It's been awesome. You guys have been great. I've been doing this YouTube thing for 3 years, and it's been a road to say the least. So it's been pretty awesome. So thank you guys so much. I appreciate the support. So let me just check in. Can you rewind? Rewind your live and look at the settings? Yes, I will do that. I didn't think that was a big deal, but I mean, you could always go back and watch it. I'll mess with that later. What's going on? Lost One's asking about BA. We can definitely take a look at that. Could you comment on iMac? Again, like I said, if we could, if you're asking me about specific stock, make sure you give me some context instead of just thoughts on, so we can actually have a conversation as far as that's concerned. But okay, let me go ahead and take a look at BAC, which is Bank of America. They have earnings on Wednesday, pre-market. Estimated earnings per share is going to be 66 cents per share. Guys, I think they miss earnings. Just a hunch. In the event that they actually beat earnings, first of all, everybody's going to be shocked. The stock market's going to go crazy if these banks start actually beating earnings. So you can see here that it's come up to 25.08. Here's my thing. So whether or not they beat earnings, and this has kind of been what's been going on in the market recently, right? You have terrible unemployment coming out. The numbers are crazy. Here's one thing to consider about that and how the banks have been reacting, how the market's been reacting. First of all, the stock market historically has actually, bottomed well before unemployment peaks. So if you go back to 2008, 2002, 1987, all of those important areas or important times in our history, the stock market has actually gone up before unemployment peaks. We could be seeing that right now. We could be seeing that. And also one thing to consider, 16 million people have lost their jobs, which is terrible. It's a terrible thing to have had happen. It only accounts for 0.3% of the total overall income in the United States. How incredible of a stat is that? While it is terrible, 16 million people have lost their jobs or have at least claimed unemployment, and it only accounts for 0.3% of all personal income in the U.S. So while that is a terrible stat to kind of mention, it's also an important stat to mention, because while it may seem terrible on the surface, it from a fundamental standpoint, it actually isn't as bad as it may seem. And again, I feel cringy talking about it, but it's an important statistic to know. And so when you're seeing a lot of these banks that are getting bailed out because it's no fault of their own, the government's actually been stepping up, I think, better than they have in past recessions. The Fed announced a $2.3 trillion additional stimulus for the banks and smaller businesses, which are the the lifeblood of the economy is the small business. And so, I think the outlook on Bank of America is going to be important, as well as BlackRock, as well as JP Morgan, all these other banks that have earnings this week. I mean, we look at the earnings, all the banks that have earnings right now, they're going to be JP Morgan, Washington Federal. Just looking at them right here. There's a bunch of other smaller ones. We look at, like I said, Bank of America, Citibank, PNC, Goldman Sachs, U.S. Bancorp. All of these have earnings this week. Like I said, BlackRock, BNY Mellon, KeyBank. It's just bank week. So while I'm using Bank of America as the one that I'm watching, all of these are ones that you should be watching just to see how the overall stock market's going to react to how this happens. So again, like I said, Bank of America, 66 cents per share. I think they probably missed that, but I don't think it's going to matter a whole lot, because if we look at the chart here, you can see that despite unemployment numbers going through the roof, these banks have been moving up as well as the entire stock market. So I don't think that these are going to be impacted as much. I think because of the stimulus that they're getting from the Fed, from the government, I think that this is going to be actually one to really kind of buy in on. And you can make the argument, nobody can predict the bottom. So maybe the bottom has yet to have come in, but all signs to me are starting to point towards potential bullish moves here as we come out of this recession. And again, I'm not saying that we're coming out of it now. I'm just saying that lots of times the stock market actually makes the moves before everybody else does. And we've seen that time and time and again. So, don't let this move freak you out, and just continue to stay disciplined and not follow the crowd. Anytime you follow the crowd in the stock market, you end up losing. So lots of times there's a little bit of reverse psychology that gets kind of thrown in here, and you have to take a little bit of your common sense approach of just because unemployment skyrocketed doesn't mean the stock market has to continue to go down. Lots of times we'll see that the stock market knows a lot more than we do, and we can't tell it what to do. We can only go by what it's done before and try to make our decisions moving forward from what we can learn from history. So looking at a Bank of America, like I said, I think they miss earnings, but I don't think it matters. I think the outlook here is going to be paramount. What I'm interested in seeing on Bank of America with their earnings plays, when they come out with their earnings report, what you should be looking for is whether or not they comment on mortgages and, people paying on their loans, that sort of thing. That's really going to impact Bank of America more than their earnings that they're more than likely going to miss, as well as a lot of these other banks too. So I would, that's what I would be paying attention to. Here's the other thing that blows my mind. They're giving people the opportunity to miss, I guess I won't say miss, but they can, what's the word I want to use? They can go into forbearance on their mortgages. That's what I was looking for up to 3 months. After that 3 months, you have to pay all of that back in one shot. So if your mortgage is $1,000, let's just say it is, and you can go into forbearance for 3 months, but after that 3 months, you have to pay all those missed mortgages back. Now, if you're going back to work, you're not going to have all that money, made back up in your first week back to work. So I don't understand that. I think it's a trap for anybody who thinks that might be a good idea. First of all, in my opinion, it's absolutely not a good idea. Do whatever you can to pay your mortgage. For crying out loud, please do it. Same thing with the student loans. Student loans, they said they're on zero interest. That's another trap, in my opinion. Don't fall into that. I know I'm kind of jumping down a rabbit hole with this, but there's a lot of important things that I think are going to happen as a result of a lot of these bank earnings. And so those are things you're going to want to take into consideration. Overall, I'm still kind of bullish on this, believe it or not. Might not sound like it right now, but we're just going to have to see how this all plays out. It's all about the outlooks this week. It's not so much about the numbers as far as earnings are concerned. It's what these companies are looking for in the future as a result of what's been going on and what continues to happen and develop. So that's my opinion on that one. Finally, we'll get to Zoom. Zoom's going to be one that I'm going to be looking at. But before I do, let me go ahead and check in with you guys. DJ says I'll never pay back my student loans. So what's going on, BizPhone? Good to see you. Yeah, don't not trim on the mortgage. So listen, I've seen reports, and people that are much bigger influencers than me have made that. So, okay, what's up, King Bradicus? Yeah, we'll definitely get to that. I'll be staying out of big auto. That's probably a good call, at least for now. Okay. Whoops. Excuse me. Sorry, just clicked off of something. All right. So again, Zoom is going to be the next one that I'm watching for. Now, Zoom has come under a lot of scrutiny over the last week and a half, right? And this is one that's actually I'm not watching it based off of earnings. I'm watching it because of what's been going on with Zoom as far as their security issues, right? And they're very similar. I would say they're similar. Maybe they are a little bit to what the issue that happened with Facebook. I would say that Facebook's security issues and the sharing of information was much more serious than Zoom was. Zoom admitted that they made an honest mistake. It was unintentional, whereas Facebook, they kind of knew about it. And maybe reports will come out that Zoom knew about it too. We'll see. But if you guys haven't been following along, there's been some information that was shared with outside countries such as China, and they didn't realize it was happening. Once they did, they stopped it from happening. That's what they're claiming anyway. I'm sure that'll be their story that they stick to. And what's ironic about this, one little side note that's ironic about this, Zoom then hired a former security executive from Facebook to assist them through this time that they're going through. They're actually getting ready to face a class action lawsuit, so this is why Zoom has actually come down, which I thought that was super ironic. So you're going to hire somebody from Facebook security who already went through this crap. It is his former guy from Facebook. So I don't know. It didn't sit well with me. I thought that was not the best decision you could have made. I mean, of all the people, maybe they're going with him because it's like, oh, I've already dealt with this before. Let's get you back on track. And maybe that's what they were thinking. But I think from a PR standpoint, it's like, really? Of all the people you could have picked out, it has to be somebody that was a former security advisor to Facebook? I don't know. Not sure that was the best decision in the world, but, people smarter than you and I are making these decisions. So they get paid a lot more money than you and I, too. So, having said all that, if we compare what happened to Facebook, if we go back and look at the chart on Facebook here, here's when Facebook gapped down considerably as they were going through a lot of this back in August of 2018. If you guys recall, Mark Zuckerberg was talking to Congress, and Congress basically looked like a bunch of idiots, asking him all these ridiculous questions, what have you. And Facebook actually ended up coming down quite a bit. But where are we at right now? Facebook continues to go up. It continues to crush it. I think they will continue to crush it. And this isn't directly comparable. What I'm trying to say is, my point is that what Facebook got in trouble for doing was far greater than what Zoom did. And again, it was an honest mistake. Yes, they're facing a class action lawsuit. I don't think there's going to be much that comes out of this. But the fact of the matter is that Zoom isn't going anywhere. I would say that Zoom continues to go up. The more that people realize that they can be just as efficient at work or at home for their work, I think that Zoom just becomes even more relevant now than it ever was. And, as a video conferencing platform that really blows all other video conferencing platforms out of the water, I really don't think there's a video conferencing platform out there that comes close to Zoom. And that comes from me, who's personally used it before, but I've also used other video conferencing apps such as Skype and all of those other ones. They don't even come close. Google Hangouts, all those. It's great for everything. You see people that are playing cards through Zoom. This is the way that they're being able to contact each other, loved ones, and that sort of thing. So it's just becoming more and more relevant. And I think that Zoom just becomes one of those companies where it's just a household name. It already is this fast, right? In the last 6 weeks, when people can't go to their loved ones' homes, or they can't, physically talk to them or go out to eat or whatever, this is what they're resorting to. And so I think that Zoom really could end up seeing, and I know this might sound crazy, but I made these crazy outlandish calls before and they've actually turned out. And there's people in this chat that can vouch for me on this one. So I think Zoom actually makes close to $200 a share before the end of the year. And like I said, I think this is just a little hiccup in the road. Once they get past this little bit of a PR nightmare, I think they'll be just fine. So having said that, if you look at the chart here and you see Zoom, seem to have bottomed out here around 108, 109 per share, and then started to go back up. Thursday was a pretty decent day for them. I've been in and out of this one as far as Zoom's concerned, so I've been trading this intraday, but I also see good long-term potential here. So if you're looking for something in your long-term portfolio, again, I think Zoom's going to be it. I wouldn't make it one big giant portion of your long-term portfolio, but I definitely think it deserves to be in there. And, you can do your own research. Obviously, I would always encourage you to do that, but this is just my opinion that I think that Zoom is definitely something that belongs there for the long term. Now, it's a great trader as far as intraday trading is concerned too. So if you're an active trader, I would say that, like I said, looks like it bottomed out here at around 108 and is starting to make the climb again. If it can break up over 125 and sustain that break, I think we start to see really strong bullish moves out of Zoom. But if it breaks below this 108, I think there's definitely some opportunities for a potential short, but don't plan on it coming down that far, that much. I would say $94, $95 if it breaks through 108 could be a possibility, but don't look for it to go below that, in my opinion. I think that's the lowest that it could possibly go as a result of this issue that they're dealing with right now. We don't know what else could happen with Zoom. Maybe there's things that start to compound it. Obviously, we can't predict the future, but given all the information that we have right now, I think that Zoom is definitely still something that I would go long on for the long term, and definitely the one to watch out for this week, especially if we can see it break up over $125 a share. So, I always like to bring up the point here. People ask me, well, this is too expensive for me. The fact of the matter is that if it's trading at around $100 right now and it does end up going to 200, you just doubled your money. So in my opinion, the price doesn't matter. The percentage that this thing moves matters. I get a lot of feedback as far as that's concerned when I talk about stocks that are a little bit more expensive for what someone would consider to be too high. And I would encourage you not to really pay attention to that as much as the potential for actual percentage moved. So if Zoom can move 75, 50% from where it's at right now, why wouldn't you? You know, so that is going to be my take on those. And those are the stocks that I'm watching this week. So now I'm going to open it up to you guys. If you guys would like to call in, I'll open up the phone lines. It's at 443-281-3763. I'll even put that in the chat here. 281 3763, and that's going to be the number to call in. You guys can ask me whatever you want. As far as the stocks, if you would like to ask me a question via phone, as we wait, though, I'll go ahead and check in the chat to see what folks are looking at. Go back in through here. Let's see here. So, Lost One says, Boeing, despite the political battle and irresponsible management over 160, do you think Boeing's going to go over 160, potential run hanging over the month? VWAP with higher lows, cup and handle, daily chart, yada, yada, yada. So, yeah, BA. So, look, we've talked about Boeing, and Lost One, thanks for bringing this one up. Boeing has, I said that Boeing was cheap, that you've been buying it under $100. We've talked about this in previous Stock Watch Sundays, and I still think that Boeing still has room to go. So, to your point, yes, the management over at Boeing has been terrible. The way they've been handling the company, especially through this crisis, has been terrible. Before this crisis happened, it was terrible. The Max Air was a nightmare. It still is a nightmare. They experienced their first year-over-year loss for the first time in like 20 years on their latest earnings report. So Boeing has been a mess. And the government likes to say that, well, they're going through this tough time because it wasn't their fault. So no, the Rona wasn't their fault, but everything that happened before that was. So having said all that, the day that it came out with its worst earnings that they had in like 20 years, the stock went up. Boeing's too big to fail. And I know people probably don't want to hear that, but it is. You can't, I mean, Boeing, yes, from the commercial side, from, you know, the Max 737s and as far as like all the airliners and stuff like that, yeah, that's bad. Not a good look. But what the fact is that with them getting bailed out, they still have tons of money wrapped up in the military. Boeing makes helicopters, planes for the military, all kinds of stuff. So it's not just, you know, commercial airliners that you have to take into consideration. It's everything else. So they are in a really good relationship with the government, if you want to call it that. But, you know, yes, I think looking at the chart here, if we go and look at this, I'm going to just pull it up here. And you said you wanted to pull up VWAP, so we'll go ahead and pull up VWAP here. Maybe. Hold on. Yes. Maybe. I just lost it. Anyways, so if it's trading up above VWAP, we probably could make a really good move here. Let's see here. I just lost my indicators. I don't know where they went. We'll figure that out. But let's go ahead and just take a look at the chart here as it stands. So I would say, Lost One, that there's a pretty decent resistance here at like 170. Right now, it closed on Thursday at 151. So if it can come up here and break through this resistance again at around 170, 165, that area there, I would say it's probably going to be poised to make higher highs here. But if we even look at this and make a trend line here, you can see the bottom here. It's making higher lows, just as you were stating. So I would agree with you. I think this is definitely one to be bullish on. As crazy as that sounds, this is one of those ones that fundamentally might not sound like it's a great idea, but given everything else that they have going on, and they're going to stay in business, the government's not going to allow them to fail. And I think that Boeing's definitely one that you should stay long on, you know, and look to see for it to potentially bounce off of this trend and go higher. That would definitely be my opinion on that. So thanks for bringing that to my attention. I don't know what happened to my indicators. I'll have to mess with that. So sorry about that part. What's going on? King Bradicus says, what's your take on work? Do you think it runs up this week with the legal issues Zoom is having? So I think that potentially, King Bradicus, it could. By the way, still waiting on some phone calls. If anybody would like to call in, again, feel free to do so. 443-281-3763. If you guys want to call in, be happy to have you. But looking at work right now, I'm pulling it up on the chart here, and I can see that it started to make a little bit of a run because maybe it was a result of what's going on with Zoom. But this is Slack Technologies, probably a competitor to Zoom is what I would equate this to. Maybe work has a run in it, but I think it would really just depend on if there's any more bad news that comes out with Zoom. So you could look at the chart here. It actually looks fairly organized. I would say that if you're looking to trade to work here, Bradicus, I would say that look for a bounce potentially off of around $24 and look for it to come down and bounce off of that $24 support and then maybe make a move. I mean, it's got to have a really strong move to get up over $30. I would be shocked if it got back to its highs anytime soon. Not to say that they won't get back to their highs here around $29, $30 a share, but I would look for potential moves lower before actually getting in and just hopping in right at the market open on Monday. So I would look for potential moves here. Like I said, support area around $24. If it comes back down there and starts to bounce off of that area, potential entry point there. And then maybe look for a break above 26.16. If you're looking to think that it may make a continuation to those previous highs, it would have to break around that $26 range for it to do so, in my opinion. So hope that helps. Let's come back here. Thanks, King Bradis. Yeah, absolutely. Lost one. No problem, man. Labna asks, what are your thoughts on FSLR? They don't have much debt and have double the cash. FSLR. That is is that an energy stock? FSLR. First Solar. Yeah, it is an energy stock. Whew. Pulled that one like way out of left field. So FSLR. Yeah, I mean, look, all the energy stocks are going to be tough. I see what you're saying, Labna, but I would say, it's going to be tough. All these energy stocks are going to be tough. I don't care if it's solar or if it's, oil, what have you. Coal, all the coal is going to be terrible. It's going to be bad. I think solar is definitely long term. Maybe would be a good one if First Solar doesn't have a whole lot of debt. Obviously, that's a good thing too. Looking at the chart here, it started to make moves back up. It's right now trading at around $40.50. It's getting back towards those highs before it actually gapped down, to be honest with you. So maybe if it goes back up over 42, you could see a nice little gap fill there. So up over $42 is where I'm seeing might be, a nice little move there for sure. As far as the short-term trade goes, long-term though, I mean, all these energy stocks are going to suffer. They were suffering before this market turned down, and then they suffered even more when it did. So it's going to be tough for them. The only thing as far as energy is what I would consider is maybe natural gas. Any of your natural gas stocks, I think that's where a lot of things is shifting to. It's just going to be tough. Solar companies, the only ones that I would consider looking at solar companies, maybe First Solar is. I don't know enough about First Solar fundamentally to say, this is going to be a good one to hang in for a while. But like I said, if they don't have debt, that's a good thing. I still like Tesla as an energy company, to be completely honest with you. I really do. I think that they're going to take over the market. I mean, they're already starting to do that with cars, and obviously everything's been put on hold, but, they had they beat expectations in sales in China last quarter. So they're still rolling. I mean, even though that they've had to halt production, they're still rolling. And I think that eventually we'll see them take over the energy market as well, as far as solar is concerned. So FSLR might be a good play, short term. Long term, I would say I'd be a little iffy on it, if I'm honest. So let's see here. Why would a company have multiple symbols with different data history points? It depends on a lot of things. They might have different share classes. You've seen this with Berkshire Hathaway, different share classes. Some of them also might have warrants that requires a different ticker. So there's a lot of reasons for that. But that's why. So good question. Let's see here. A question about the daily watch list. Are OTCs included in that? Yeah, absolutely. So if there's anything, so if you guys are asking, I see that DJ is asking about the Chaos Crew. So if you want to be part of the Chaos Crew, again, go click the join button. And for $4.99 a month, you get a daily watch list from me. And yes, they will include OTC stocks as well. So if I see some potential there on a particular OTC penny stock or penny stocks in general, I'll definitely put it on there. I always provide some support and resistances as well, and why I'm watching them. So things I'm evolving it a little bit more. This is still pretty new to me as far as this whole membership thing goes, but I figured, maybe just another value add for you guys, and I think that's pretty cheap for being able to provide that much information for you. So yeah, it will include anything that I am watching in particular. The OTC market has been a little bit wishy-washy over the last 6 months, a better part of a year, but there are certain ones that I definitely see value in. So moving forward, I think we'll definitely be able to do that. So I got somebody calling in. Let me go ahead and get to the phones here real quick. I think I have a feeling who this is. Hi, thanks for calling Stock Watch Sunday. Who's this? Oh, hold on. Hold on 1 second. Oh, man. Let me get you on here. Hold on 1 sec. Be nice if I had the Bluetooth on, huh? I can't hear him. There we go. Are we on?
Yeah, it sounds like it, but how you doing?
Is this Bob?
Yeah, it is, man. Happy Easter.
Hey, you too, Bob.
Question on the OPEC deal. If they cut production by 9 million barrels?
10 million.
A day?
Yeah.
10 million? Yeah, they said up to. How much do you think that's going to change the price of oil?
I don't think it'll.
Worldwide. That's one of the biggest cuts they have.
Yeah, so it's the biggest cut they had. It's about 10%. There's a lot of reports coming out there that it's still not enough because demand is just so low. There's a lot of reports coming out saying that 15% or better is going to have to be the mark that they need to meet in order to be able to make any kind of dent as far as it's concerned. You got to remember, it's oil. Last I looked was trading around $23 a barrel. That number is just to keep the drills going. If it falls below that, they're going to have to start shutting down, the drilling, period. And in order for them to be profitable, they need to get the price of oil back up over $50 or $55 a barrel in order for them to be profitable and actually have them, do well. So as far as that's concerned, they're going to they got a lot more work to do. So yeah, it's great that there's a pretty unprecedented numbers that they're coming through right now, but they got a lot more work to do. It's just pretty crazy when you think about it.
Okay, thanks, bud. Have a good one.
You too, Bob. Thanks for calling in. All right, again, guys, 443-281-3763. Thanks for the call, Bob. Appreciate you. We got everything working now, so we're good. Let's see here. Just getting back to the chat here. Dawson says, JNUG used to be at $80 and is down to $5 a share. Incredible move, right? Unbelievable. Do you see it going back there where it was long-term investment? So here's what I would say about JNUG and any leveraged ETF like JNUG and your Gushes, your UGAS, DGAS. None of them are good long-term investments. None of them. Because you have decay that you have to also consider. So a lot of these leverage ETFs, they have decay, so they're always working against you from a long-term standpoint. In no way, shape, or form would I get in JNUG for long-term. They're great intraday traders. You can make nice swing trades out of them. But for long-term, that's a no-go. If you're looking for something that you want to invest in as far as the gold sector is concerned, go look at your GLDs or go look at the ticker symbol gold. Barrick Gold is GOLD, trading it around, I don't know, last I looked at $17, $18 a share, somewhere around there. So nice and cheap still, but that's going to actually move with the price of gold, whereas JNUG isn't. JNUG is a miner ETF. So if the miners aren't working, like everybody else, you're going to see those miner stocks come down. So I think JNUGs definitely have some nice bullish moves ahead of it, but I wouldn't say that it's a good long-term investment because of that decay. And ETFs, especially those leveraged ones, they're all over the place. They're very unpredictable as far as a long-term investment standpoint is concerned. And really, the only time that they really shine is if you're trading them intraday or maybe like a short swing trade, something like that. All right. So, great question there. Roadkill, why would it come? Oh, I already read that one. Sorry. Okay. Man, I'm actually keeping up with these. What about Tesla? Bullish or bearish for short term? That's a great question. So here's what I would say about Tesla. I think Tesla is still bullish. I'm invested in Tesla long term. I would tell any of my friends to invest in Tesla long term. I don't care what the price is. Okay. So if you're gonna wait, if you think that you're gonna be able to hop in on an opportunity and wait around for the bottom, for another bottom for Tesla, I think the bottom came in. I mean, it was down at $300 range a few weeks ago, and now it's back up over 550. So I would say that if you were waiting for cheap Tesla shares, you missed your window. But having said that, I would still be investing in Tesla right now. I don't think I've seen anything, and you guys will probably let me know if you have, if we have or haven't. But I would say that if you are looking at how do I just say this? If you're looking at Tesla, I would always be in Tesla. You know, it's going to be a long-term investment, however you shake it. I've been so bullish on Tesla for as long as I can remember, and they just have so many other good things going on. One thing that you want to make sure, like I said, if we were looking at battery day, I think was supposed to be on 420. So if we haven't gotten any reports on that. As far as whether or not that's still going to be a thing, is it going to be done virtually? Is he still going to have battery day? I don't know. Battery day did get moved to mid-May. Thank you. Thanks. I appreciate that. I didn't catch that. So thanks for letting me know. Yeah. So mid-May. So if battery day still comes out and things are good with that, I would venture to say that, when we saw this type of, event from Tesla last time, it was with their autopilot stuff, and it went through the roof. Everybody was super excited about it. I would imagine battery day is probably going to have the same type of reaction, but we'll see. Maybe you can wait till battery day. But like I said, if you're waiting for the perfect time to invest in Tesla, it was yesterday. If you still want to get in Tesla, then just get into it. So that would be my sentiment with that. So ventilators, yeah, I mean, they've made ventilators, but I don't, that's not going to be enough, really, in my opinion, to move the needle for Tesla. They made over 1,000 ventilators, for area hospitals and stuff like that, which is great, fantastic, but that's not going to be something that really is going to impact them on a grand scale. You know what I'm saying? So definitely good, obviously. But, that's not going to be a huge factor for Tesla as far as I'm concerned. Great question. I saw somebody was asking about MFA and a lot of these REIT stocks. So if you don't know what a REIT stock, it's a real estate investment trust stocks. It's a sector here. If we're looking at something like MFA, Chris Kaysen says, has huge volume increase lately. Is it good for long-term investing? I can't remember which ones, and I need to do some more research on this. I know that we talked about one that was RWA, I think it was. RWA was another REIT stock that actually met all their margin calls. So if you guys don't know how these real estate investment trusts work, a lot of these have debt, and they have notes that they have out with these other larger banks to support their efforts. And so if you're looking at these, those banks can basically call their notes whenever they want. They can call their notes whenever they want. And, a lot of these banks now, because they're in a time of crisis, have been calling their notes, and you have to pay them 100% when they call them. And so a lot of these REIT stocks have not been able to do that. And I can't remember if MFA is one of them that did or didn't, but I know that RWA was, if I'm not mistaken, it's RWA, RWS, RWA. Maybe not RWA. Hold on. Might have been, it's RW something. Somebody's gonna let me know. But if you're looking at any of these real investment trusts, RWT. Thank you, Black Roos here. Thank you so much, RWT. So yeah, let's take a look at that one. Actually, let me share my screen with you. So MFA is one here that he was being asked about. If MFA was one that could not meet their margin calls, then I would say this is probably one to stay away from. RWT, though, is one that did. They had basically the bank said, hey, we need our money back. RWT said, sure, sucks for us, but we'll pay it. And they actually did. And this has been one that's actually been doing well. So from a fundamental standpoint, if you're looking for any of the real estate investment trusts, look for ones that actually were able to pay their notes. I can't remember for the life of me if MFA did or didn't. Oh, MFA was able to get forbearance. So there you have it. So they were able to get forbearance. So it's not quite as good as RWT was, but they at least were able to push them back a little bit further. The only thing that I would be cautious of as far as that's concerned is if, forbearance is up and they still have to make up for that payment. So maybe they come up with something, maybe they don't, but I would say just be cautious of that. I would look towards the ones that were actually able to pay off their notes when they were called. So that would be my thing as far as the real estate investment trusts are concerned. Is INKW for real? Latest company news, Wells tested. I mean, yeah. Look, INKW, if you guys aren't familiar with, it's a penny stock. It's been something that I've been in for a long time, waiting for them to get the ball rolling. Listen, by this time, if they can't get it together, then they probably never will. But if you have something that if you want to throw some money into, or you're already invested in it and you don't need that money, just let it sit in there. That's what I'm doing. I'm just going to let it sit in there. And if it just finally decides it wants to do something one day, great. But I'm not dwelling over INKW every single day of the week. If I see it move, awesome. If I don't, it is what it is. I got plenty of other liquidity that I can use to invest in other stuff. And, that's just how I treat that. So, do I normally cover IPOs? I know right now is a difficult market for IPOs. But sometimes they show up for Chewy, for example. So, yeah, I actually liked Chewy. I still like Chewy. And we've talked about it on Stockwatch Sunday before. So I do talk about certain IPOs when they're significant. Actually, we talked about Zoom's IPO back when that came out almost a year ago, if you can believe that. It's been a year already that Zoom IPO'd. Chewy IPO'd, I think, in June. But I think that Chewy is also going to be another good long-term one, especially it's a good stay-at-home play. It's what I call a stay-at-home play. It's going to be treated like your Amazons. Any service or company that's going to be able to keep their doors open throughout all of this, especially when it comes to online sales, like your Amazons, I think Chewy falls into that category. And I think it's definitely something that I would be bullish on, for the foreseeable future, because demand, they've already said that, they've been having trouble keeping up with demand, which means that they're going to have to hire more people, which means more jobs, which means, many good things are to come for that company. So, and we've seen that. So yeah, I think Chewy is definitely a good one. And I will end it with this. So Lost One asked overall view on the market short term. I think that's a great question. But I won't go into too much detail because I actually talk about this for tomorrow's video. So you beat me to the punch, man. But I will say this. I will leave this with this. If you guys can't tune in tomorrow, the market short term is going to come back. I think, in my opinion, I think the bottom has come in, and I may or may not get grief for this, but I don't care. I think the bottom has come in, and I think that if you guys have been following along on this channel, I've been telling you guys, if you're looking to add to your investments, if you have a pile of cash that's setting aside and you're waiting for the bottom to show up, you will never see the bottom because nobody can predict it. Nobody can predict when the bottom is truly in. But what I will say is that we've already seen a 50% retracement from the lows. And that to me indicates, if we look at history, we look at 2008, we look at 2002, we look at 1987. When you see that 50% retracement, bullish move. The market's already starting to go bullish. So I think that the bottom has already come in, as crazy as that sounds. Like I said earlier, you kind of have to take the common sense out of it because the market's always going to go back up before economically and fundamentally it all catches up with itself. So I think as far as the stock market's concerned, short term and long term, the bottom's in. The bottom was already in. It was in at the end of March. And I think that we might see some dips here and there. It's not going to go straight back up, but I think that we start to see a nice move back up, and it'll go back to its highs sooner rather than later. If I dare I say, making a bold prediction that we actually revisit our previous highs before 2020 is over with. You heard it here first. So, that is my final thought for tonight. So thanks, Lost One, for that. I appreciate the question. Guys, I really liked having you call in. So next week, let's make it a point to have some more folks call in. Maybe we'll do something to entice people to call in. I really like having conversations with you folks. So that's going to do it for me. If you guys like this video, if you got value out of today's video, again, certainly I would appreciate a thumbs up. And if you're not yet subscribed to this channel, hopefully I earn your subscription as well. Make sure you're hitting that notification bell to get notified every time I put out a video. And thanks for another good one tonight, guys. You guys are killing it. I just can't believe the support that I've been getting over the last month and a half, 2 months. It's been a pretty awesome, again, like I said, growth that we've seen on the channel. Over 12,300. Never would have thought it would have happened. So thanks, guys, so much. Appreciate you. As always, I will see you all before the bell. And B. Smith is out. So have a great week, guys.